Mr. Wynaendts, thanks for taking a few moments to discuss Aegon's performance in the third quarter of this year. Give us the highlights of how the business performed.
Well, let me say first that we can be pleased with our results. These results are showing clearly that the benefits of implementing the strategy which we have chosen are paying off. You see that in terms of strong underlying earnings, strong earnings growth. You've seen continued sales progress, but in particular profitable sales. We also continue keeping our expenses under control, effectively reducing our expenses, and a strong capital position, which in this environment is an essential part of our strategy.
You maintain that your franchise is strong, meaning that sales continue to be at good levels. Give us some color, if you would, on how the demand is for your core products and services.
We clearly see a continued demand for products, our services, the need for protection, the need for savings and retirement in all the parts of the world where we operate is just continuing. I think the reality is really supporting us here. To be a bit more explicit, let me start about the US. So in the US, we see clearly our life sales are up actually 9%, our health sales are up 24%, and even in our savings business and at retirement business, which has actually already grown significantly over the past quarters, we see continued momentum. And that's something we can be very pleased of. The Transamerica brand, the franchise in the US clearly is very strong. In other parts of the world, the picture is a little bit more mixed. Let me talk to you about the UK and the Netherlands, where we see a lot of regulatory changes taking place. In the UK, it's RDR. In the Netherlands, we see change in relation to fiscal treatment that has had an impact on the sales. But all in all, in the other markets in which we operate in Central and Eastern Europe, Asia and Latin America, we see continued momentum in sales, and that is supporting what I said earlier, a strong franchise which we have developed there.
You mentioned your newer markets, and as such, Spain is included there. Give us a little color on what's going on with your business there.
Well, indeed, a lot is happening in Spain. So we have an economic situation which is difficult on one side. On the other side, what we're seeing is that there has been a consolidation and a continued consolidation with the savings bank in Spain, those called the cajas. And that has an impact on our business because, as you know, our distribution is based on joint ventures with a number of regional cajas. These cajas are consolidating, and that has an impact on our business. We have sold our joint venture with Banca Civica to CaixaBank. As you know, we are exiting Caja de Ahorro Mediterráneos, which has been acquired by Sabadell, and we are in discussions in relation to our exposure with Unim, which will be taken over by BBVA. That will have consequences, but at the same time, this consolidation is also creating new opportunities, and I strongly believe that the strong franchise we have, the know-how we've established, we're being recognized as being the leader in bancassurance Spain, will provide us opportunities to be continued participating in the Spanish market, which we believe on the long run, and our business is a long-term business, will remain an attractive market for Aegon to be present.
In addition to Spain, of course, in your established markets, there are a lot of change underway in the Netherlands, in the UK. What are you doing in these markets to adapt your business to the new realities?
What we're doing in these markets is really all about investing in the future, having a proposition to a customer that addresses their needs in a new way. Let me give you two examples. In the Netherlands, we have launched a new bank, KNAP. That is effectively an electronic platform which allows us to connect directly with our customers, which allows the customer to perform a lot of banking transactions and obtain services through a very simple way. We believe that's the future. It's all about getting closer to a customer, connecting with our customers, and allowing the customer to do much more themselves, because that's a trend we see happening. And let me take you to the UK and with another example. We've just launched the workplace platform proposition, and that is unique in the UK. It is unique in the UK because it allows employees that are part of a pension plan of a company, allows them to stay within the same platform when they retire and make sure that they're able to put in place all the services and products they need when they retire. That seamless transition is absolutely unique. And again, it is highlighting the strategy we are following, which is all about staying close and connecting with our customers wherever they are in the life cycle.
Last year you put forth some ambitious financial targets. One of them was to have a capital base ratio of 75%. How are you doing in this regard?
Well, in general, what you see with our third quarter is we are making good progress in achieving our targets. This despite headwinds from financial markets and a particularly low interest rate environment. In relation to the 75%, that is a target which we have established last year with the aim of achieving a minimum of 75% capital base ratio by the end of this year. And I'm pleased to be able to share with you that at the end of the third quarter, we have actually reached the 75%. And that means that we are comfortable that for the remaining quarter, we'll be above the 75% we set ourselves as a target.
The big news this week, in addition to Aegon's third quarter results, is the results of the presidential election in the United States. President Obama, again, succeeded in persuading voters to give him a second term. What is the impact on Aegon's business in its largest market?
You see, what really is important for our business is the fact that customers in the US have the continued need for protection products. They have to save for the future. They do retire. They have to be able to retire with a peace of mind, with being assured of an income which covers their cost, their basic cost. That is what is really important for our business. And I believe that with the election now behind us, people, in particular in the US, will be looking forward. There's a lot of challenges that need to be addressed. But the reality for our business is that the dynamics are really good. The demographics, with people becoming older, needing to save more for the future. All of these dynamics are unchanged and will continue to be supportive for our business.
Looking ahead now, are you confident that Aegon is going to stay on the present course of strong earnings, sales growth going forward? Can you give us some feel for what we can expect?
Well, first of all, we have a clear strategy. Our organization has gone through a significant restructuring, and we are today in a strong position. We've dealt with the issues we had to deal with, and we're looking at the future with a lot of confidence. And I'm pleased to see that our franchise in all the markets in which we operate is very strong. The need for our products and services remains strong and will continue to be even stronger for all the changes in the world, economic but also demographic changes. And that gives us confidence that we're well positioned in terms of continuing to increase our earnings, grow our sales, profitable sales in different areas of our business, while maintaining a strong capital position. Because in this environment, I want to reiterate this again, a strong capital position is a must, it's not a luxury.
Thank you, Mr. Wynaendts, for taking a moment to share with us your thoughts, and we look forward to keeping up with you going forward.